Hey there, traders! Today, we're diving into the latest developments in the Forex market for December 20th, 2024. We'll cover the key currency pairs, analyze the major trends, and take a look at what to watch for heading into the next trading day. Let's break down what's happening so you can stay ahead of the game. The US dollar index finished today with a slight uptick, hovering around 103.45. A surge in U.S. Treasury yields and stronger-than-expected economic data contributed to the greenback's resilience. November's consumer spending figures came in hotter than anticipated, signaling continued momentum in the economy as we close out the year. This strength has kept traders watching for any adjustments in the Federal Reserve's policy stance. While the Fed signaled no immediate rate hikes, today's data could fuel speculation about future tightening in early 2025. This will likely keep the dollar in focus for the next workday. The euro struggled to maintain gains against the dollar today, closing at 1.0870. Persistent concerns over sluggish economic growth in the Eurozone weighed heavily on sentiment. The European Central Bank's cautious stance earlier this month didn't offer much reassurance to traders. Watch for any news on Germany's manufacturing PMI, due early next week. Potential spillover effects from US data that could further pressure the euro. The British pound saw mixed movement, ending the day near 1.2575. A rebound in UK retail sales figures helped limit losses, but the market remains cautious due to lingering uncertainty around next year's Bank of England policy moves. Inflation has moderated slightly, but the labor market remains tight, leaving traders unsure about the BOE's next steps. Next workday tip: keep an eye on any comments from BOE policymakers as well as updates on UK housing data, which could impact the pound's trajectory. The yen took another hit against the dollar, with US dollar to Japanese yen reaching 149.30. The Bank of Japan's ultra-loose monetary policy continues to weigh on the currency, despite recent efforts to stabilize it through market interventions. The stronger dollar today amplified the yen's losses. For those trading the yen, watch the BOJ closely for any surprise moves as they approach their next policy meeting. Even minor adjustments could create significant volatility. The Australian dollar struggled today, closing at 0.6675, as risk-off sentiment dominated. Weak commodity prices and soft Chinese economic data were key drivers. The Canadian dollar weakened slightly, ending at 1.3670. Falling oil prices dragged the loonie lower, as WTI crude dipped below $73 per barrel. For the Aussie, keep an eye on China's economic updates and iron ore prices. For the loonie, watch crude oil inventories and any shifts in global risk sentiment. The Turkish lira continued its downward spiral, hitting 29.50. High inflation and political instability remain key challenges for the currency. The South African rand dropped to 19.00, weighed down by concerns over South Africa's economic outlook and energy supply issues. Heads up for next workday: emerging market currencies could see heightened volatility if U.S. economic data continues to outperform. As we move into the next trading day, here are the key themes to watch. U.S. data impact: any follow-through from today's strong U.S. data could support the dollar further. Keep an eye on housing starts and jobless claims figures. Eurozone sentiment: if Germany's upcoming economic releases disappoint, euro to US dollar could face additional selling pressure. Risk sentiment: with year-end positioning underway, markets may see thinner liquidity, amplifying volatility. Stay cautious, especially with commodity-linked and emerging market currencies. That's it for today's analysis and forecast. Remember, the Forex market is full of opportunities, but it's also a place for disciplined and informed trading. Make sure to review your setups, watch for key levels, and always manage your risk. If you found this breakdown useful, don't forget to like and subscribe for more insights. Until next time, happy trading!